Hey everyone, and welcome back to Investing Talk podcast today. We're going to be taking a look at Duolingo,
Okay.
a company that's been making waves not just in the world of language learning, but also in the stock market.
Yeah, it's really been fascinating to see how they've kind of captured everyone's attention
Yeah.
and, not just for their innovative approach to learning languages, but also for their impressive, performance on Wall Street.
Yeah, you're absolutely right. I mean, just on January 17th, 2025, DUOL closed at $351.13 a share. That's a gain of 2.73% for the day, which
That's
is great.
pretty great.
But what's even more impressive is that it's part of a larger upward trend. Over the past 5 days, the stock has climbed over 10%.
Wow.
Now, I'm not a financial whiz, but even I know that's some serious momentum.
Absolutely. And that momentum is clear when you look at, Duolingo's stock compared to its moving averages. Currently, it's trading above its 50-day, its 100-day, and its 200-day simple moving averages.
Okay, so before we go any further, can you just break that down for me and our listeners?
Sure.
Like, what exactly does that mean and why is it important?
So think of moving averages as these trend indicators. They smooth out the daily ups and downs of a stock's price
Right.
over a specific period, and it gives investors a clearer picture of kind of where that stock is headed. When a stock is trading above its moving averages, like Duolingo stock is now, it generally signals a bullish trend, which means investors are feeling pretty optimistic about the company's future. And the fact that Duolingo stock is above all three major moving averages really suggests a strong and consistent upward movement.
Okay, so, things are looking pretty good for Duolingo so far, but are there other indicators that we should be looking at to get a fuller picture?
Definitely the Relative Strength Index, or RSI, is another helpful tool. It measures the magnitude of recent price changes to tell us, whether a stock is overbought or oversold. Currently, Duolingo has a 14-day RSI of 59.80.
Okay, so what does that number tell us? Is that a good sign, a bad sign, somewhere in between?
Yeah, so it's right in the middle of what we call neutral territory.
Hmm.
An RSI above 70 would suggest that the stock is overbought, meaning it might be due for a price drop. On the other hand, an RSI below 30 would indicate oversold conditions, which could be a good opportunity to buy. Duolingo's RSI of 59.80 means it's neither overbought or oversold, but it's leaning towards that bullish side.
Interesting. So overall, the indicators are pretty positive. But I remember you mentioning mixed signals earlier.
Yeah.
What's the other side of the story here?
You're right. We do need to look at the whole picture. If we consider the Manny CD, that's the moving average convergence divergence, it currently shows a value of negative 1.32 for Duolingo stock. This could be interpreted as a slightly bearish signal in the short term.
Hold on, Barish. I thought we were talking about all this positive momentum.
Yeah.
Help me understand this. How can we have both positive and negative signals at the same time?
That's why it's so important to look at all the indicators together, not just one in isolation. The market is complex, and there are often conflicting signals. Think of it like getting different opinions from your friends. You wouldn't base a big decision on just one person's perspective, right?
That's a good analogy. It makes sense to consider everything. Speaking of getting the full picture, Duolingo's recent earnings report definitely adds to the positive side. In Q3 2024, their revenue blew past expectations, reaching $192.59 million.
Wow.
That's almost a 40% increase compared to the same period last year.
Exactly. And I think we can connect this strong financial performance to some of the exciting things they've been doing to attract users. Remember those news stories about their AI-powered video calls?
Oh yeah, where you can practice your language skills with a virtual character.
It sounds way more fun than those old language learning CDs I used to listen to. Oh, I know, right?
Yeah.
It's a really smart move by Duolingo using cutting-edge AI to make learning more interactive, and it seems to be paying off big time in terms of both user engagement and revenue.
And speaking of user engagement, there was one statistic that really caught my attention.
Okay.
The huge jump in people learning Mandarin. It's up by 216% year over year.
Yeah.
That's incredible.
You're right to highlight that, and there's a fascinating reason behind that surge. It's directly linked to the growing popularity of RedNote, a Chinese social media platform. Apparently, people are eager to learn Mandarin so they can join this new online community. It really shows how trends in one area, like social media, can unexpectedly impact something seemingly unrelated, like language learning.
That's such an interesting connection. It makes you wonder how Duolingo is responding to this trend. Are they specifically targeting these new Mandarin learners?
That's a great question. They'd be smart to capitalize on this wave of interest. It would be fascinating to see if they're tailoring their marketing or developing specific features to attract those users.
So we've talked about Duolingo's strong momentum, their impressive financial performance, and their innovative features. But what about their overall valuation? How does Duolingo stack up in the market?
As of today, Duolingo has a market capitalization of $15.4 billion. That's a pretty significant number reflecting investors' confidence in their potential. However, it's worth noting that Duolingo also has a rather high price-to-earnings ratio, or PE ratio, of 189.8.
Okay, I'm going to need you to decode that one for me.
Yeah.
What exactly does a high PE ratio tell us?
Yeah.
And should investors be concerned?
The PE ratio compares a company's stock price to its earnings per share. A high PE ratio, like what we see with Duolingo, can indicate that investors have high expectations for future growth and are willing to pay a premium for the stock.
So they're betting on Duolingo's continued success. But what are the chances they can actually live up to those expectations?
That's the million-dollar question. And to answer that, we need to delve into Duolingo's future prospects, their growth strategies, and their potential challenges.
Well, you've definitely piqued my interest. Let's dive into those aspects right after. Hold on. No break today.
Okay.
We're just going to keep going.
Sounds good.
So let's get right into it.
All right.
All right, so we were talking about Duolingo's high PE ratio and what it means for their future. I'm curious to hear more about their growth strategies.
Yeah.
What are they doing to justify that investor confidence?
One key area to watch is their Duolingo Max product. Analysts are projecting some pretty impressive subscriber growth for that, potentially hitting 1.37 million subscribers in 2025.
Wow, that's a lot of subscribers.
Yeah.
But what exactly is Duolingo Max, and why are analysts so excited about it?
So Duolingo Max is their premium subscription tier, offering additional features and personalized learning experiences.
Okay.
Think of it as the VIP version of Duolingo. It gives them an additional revenue stream beyond their free app. And analysts are forecasting it could bring in a cool $153 million in 2025.
That's a significant chunk of change. It sounds like they're really trying to cater to those users who are serious about language learning and willing to pay for a premium experience.
Exactly. And they're smart to do so. It's a way to diversify their revenue and tap into a market that values those extra features and personalized support.
It makes me wonder if they'll continue to roll out even more premium features or subscription tiers in the future.
That's definitely a possibility. They're likely keeping a close eye on user feedback and market trends to see what resonates with their audience. It's all about finding that sweet spot between offering valuable features and maintaining a strong user base, both free and paid.
Okay, so we've got this exciting new product. We've got skyrocketing user growth, especially with Mandarin learners,
Right.
and a high PE ratio that suggests that investors are really optimistic about Duolingo's future. But what about the potential downsides? What are the challenges they might face in maintaining this momentum?
That's where things get really interesting. You're right, they've got a lot going for them, but they're not without challenges. One key factor is competition. The language learning market is getting increasingly crowded with new apps and platforms popping up all the time.
Well, I've seen ads for so many different language learning apps lately. How can Duolingo stay ahead of the curve and make sure they don't get lost in the noise?
Innovation is key. They need to constantly evolve, introduce new features, and find ways to make learning even more engaging and effective. The video call feature is a great example of that. It's something that sets them apart from the competition.
I'm also curious about their reliance on trends like the red note surge. What if that interest in Mandarin fades? Can they ensure stable growth without being overly dependent on these unpredictable trends?
That's a sharp observation. You've hit on a crucial point. Relying solely on trends can be risky. Duolingo needs to have a diversified growth strategy that doesn't hinge on any one factor. This could involve expanding into new markets, developing features that appeal to a wider range of learners, or even exploring strategic partnerships.
Speaking of strategic partnerships, are there any analyst opinions or predictions about Duolingo that we should be aware of?
JP Morgan, for example, has given Duolingo stock an overweight rating. That means they believe the stock will outperform the market in the coming months, and their price target for Duolingo is $400.
Wow, that's even higher than its current price. What's driving their optimism?
They see the updated video call feature as a game changer. They believe it has the potential to significantly boost user engagement and, as a result, drive revenue growth.
So if JP Morgan is right, those who invest in Duolingo now could be in for a nice return. But I'm still thinking about that high PE ratio. It just makes me wonder if the stock is getting a bit overhyped.
Yeah.
Are investors getting carried away with all the excitement?
It's a valid concern. A high PE ratio can sometimes indicate that a stock is overvalued, meaning its price doesn't quite match its current earnings. It suggests that investors are banking on significant future growth to justify that price tag.
So the big question is, can Duolingo really deliver on those high expectations? What would it actually take for them to justify that valuation in the long term?
That's the million-dollar question, and it's one that investors should be seriously considering. They need to ask themselves, what will Duolingo's growth trajectory look like in the coming years? Can they maintain this impressive momentum?
What specific factors should investors be paying attention to? What are the key indicators of long-term success for Duolingo?
They need to demonstrate consistent revenue growth, preferably from a diversified set of sources, not just any one product or trend. They also need to continue innovating and expanding their user base.
And what about competition? How can they stay ahead of the pack in such a dynamic and competitive market?
They need to prove that their language learning platform is truly superior, whether that's through cutting-edge technology, personalized features, or a learning approach that actually gets results.
It sounds like Duolingo is at a critical juncture. They've got this incredible opportunity to capitalize on their current success. But they also face some significant challenges in maintaining that momentum and meeting those sky-high investor expectations.
You nailed it. Duolingo's story is far from over. The next few years will be crucial in determining whether they can truly become the dominant force in language learning and live up to their impressive valuation.
It's going to be fascinating to watch how this unfolds. Yeah, it's definitely a story worth following for anyone interested in the world of, tech education and investing. But even if you're not planning to buy DUOL anytime soon, their journey is a fascinating case study in innovation, market trends, and the challenges of building a successful business in today's fast-paced world.
Absolutely. It highlights the importance of not just riding the wave of a trend, but also building a solid foundation for sustained growth. Duolingo needs to be more than just the Red Note language app to achieve long-term success. They need to solidify their brand as the go-to platform for language learning. Regardless of what's trending on social media.
That's such a key point. They need to build a loyal user base that chooses Duolingo because it's the best, not just because it's the most talked about at the moment.
Exactly. Think about the companies that have stood the test of time. They've consistently delivered value, adapted to changing markets, and stayed ahead of the competition. Duolingo needs to prove that they can do the same.
This has been an incredibly insightful discussion. You've given us a lot to think about, both in terms of Duolingo's potential and the broader trends shaping the edtech landscape. What's the one key takeaway you'd like our listeners to remember from this episode?
I think the most important thing is to approach investments with a critical eye. Don't get swept up in the hype. Look beyond the headlines and dig deeper into the company's fundamentals, their growth strategies, and the potential risks. Remember, investing always involves risk, and past performance is never a guarantee of future results.
Wise words. It's all about doing your homework, understanding the company, and making informed decisions based on your own investment goals and risk tolerance. Speaking of doing your homework, if you enjoyed this discussion about Duolingo and want to hear more insightful analysis of companies and trends shaping the market, make sure to subscribe to Investing Talk Podcast. We release new episodes every week covering a wide range of investment topics.
And don't forget to share this episode with your fellow investors. And leave a comment letting us know your thoughts on Duolingo and what other investment opportunities you'd like us to explore. We always love hearing from you.
Thanks for listening, everyone. Until next time, keep those brains engaged and those portfolios diversified.